Hey, what's going on, everybody? This is Yusef Scott, and I thank you so much for being here with me on this video. Thank you so much for subscribing, for all my viewers over the years. I definitely appreciate you guys. Couldn't have done it without you. I know that I bring great content to the my channel continuously, and but I couldn't have made it this far without you guys. So I definitely appreciate it. That said, I wanted to talk about how it is I got to the point where I am right now. How I what helped me along my journey, and just to let you guys know, of course I trade forex, but I consider myself a long-term trader, and I'm going to go through some things to show you how I came to the decision of being a long-term trader opposed to just a regular day trader and all that. Um, so just like everybody else, I think that when I started trading, of course, I wanted to learn how to scalp the market, and in which I did. I scalped the market very well. I of course actually made a couple of videos about scalping, and I found it to be a very good feat, because I thought originally that scalping was going to be hard, but I had learned to master that as well. In fact, the very first time I traded, I think I put maybe 500, a little over $500 in my account, and I think the first night I ever traded, of course, I scalped the market, not having a clear understanding of what I was doing, and I walked away with took my account from five something up to $1,800, and this is under an hour's time, maybe 45 minutes, and then 30, 45 minutes later, I remember losing everything that I had gained in the previous 45 minutes, or whatever it was, hour. And then by the next morning, my whole account was blown. And so there were plenty of times like that where I had gained money and I lost money, and then I started to think about it, like, why is it that I keep losing my money? And I realized that, of course, I wasn't trained up enough. I didn't have a clear understanding of what forex was. So I did some extensive research. I did a lot of thinking and researching, tons of researching on the market, and then I started to develop these different mindsets, and a lot of things started to come to me, believe it or not. And that's when I started to look at the market for what it was, and I said, well, man, you know, here I was trading on an hour chart, and no offense to anyone that trade on an hour chart or any other smaller chart. A lot of people make thousands of dollars daily trading, scalping. So no offense to no one. This is not to take a shot at no one, but just this is my style, and I just want to speak on it, and just based on what I see and what helped me out, and how I trade. Um, Here I was trading on an hour chart, and I was trading all the many ups and downs. Like, if you think about it, in trading, the market goes up and it goes down, up and 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 down. You have a lot of up and downs on the hour chart. And then I started to think, well, on certain pairs of market, it goes all the way up, long runs, and all the way down, and all the way up. And I'm thinking, well, it would be a lot easier if I just caught the long runs and then catch the runs down, because I know after it go up, it has to go back down. And once I started to study that, it started to open my eyes up to a lot of things. and now I take them long runs. I've developed a great bit of patience, because at first, you're so anxious trying to make this money, so anxious. You have money in your account, you're trying to grow your money. I understand it. I understood that, but actually at the time, I didn't really understand. I just wanted to make money, and I understood that all I knew was, okay, if I made this much the first time I traded, I should be able to do that all the time, and it's not always that way. I mean, I think I was trying to make trades out of a no-win situation. Sometimes it's not a good time to trade, and just because you're trading your pair of choice, it doesn't mean that it's a good time to trade. So I had to realize when to execute a trade, and so realizing the type of trader I wanted to be and focusing on that and looking for strategies that supported my trading style is how now I have the vision. I have like an eagle vision. I could just see exactly the move, and sometime, of course, you might have fundamental news or unexpected occurrences around the world that might drive the market out of bounds or outside of the realm of what you thought it would happen. It happens all the time, and you can't do anything about it. It's just the way it is. Occurrences around the world would just trigger the market to do some things that you never thought it would happen, or thought it would do. So when I saw that how powerful the long-term trading was, I said I would be crazy not to do it, because it's a lot safer, especially if I'm not over leveraging my account. So and that's what I did. I focused on that, and today you guys might see that I have trades that run longer. You might see the profit amount might be a lot larger, and that's because I take them long runs. Yes, I do close down trades and then reopen them, so that I can build my account, so that I don't have all that weight on the open side. I like to close down some of the trades so that I can build my account and create more strength for myself in the market, so I can open up more trades or have enough equity to open up trades outside of, it's just a lot of different reasons for me having the long-term strategy mindset, I guess. So that being said, when looking at the chart and understanding that I am a long-term trader, I go for the long-term moves, the long moves, where I can make a lot of money. And so basically, looking at this is the New Zealand dollar, Canadian dollar chart. At a glance, I can see that there's something possibly happening here, a setup getting ready to happen. I can see that the market could possibly go back here. Right now we're in what's called a ranging market. All right, and if you don't see that, you got to get your eagle's vision. Let me just draw some lines on so you can see what it is that I see when I trade the market. All right, now I see that the market has started off here, which is it was an obvious level of resistance, and when it broke it, it went from there to here, ebbed and flowed back down to that same, what used to be resistance now turned support. It went from there and bounced back up to resistance, and then it kept going. Now the great thing about it, that when it broke this level, it came down here, but even at that level, when we put a line there, let's look, as a matter of fact, let's look left on these first. Let's look left on here and see how well supported this is. Let's see. Okay, you can see that on the 4 hour it tapped that level. Now that's the highest level, so something that I do, I always put a support and resistance at the highest and lowest level. Now it has 3 taps in this area, so going back to 2014, this area is definitely in a resistance level. So then we go to the next level and we move this down, this the hair, and then we check that. Let's go back and check that. Then you see the obvious. Going back 13 years ago, it was definitely supported, and then it broke this area here and it dropped down to the next level. Let's see how strong that is. All right, let's see, about somewhere around there. Let's go down, and we see that it was tapped in 2011, this being 2006, 2005, 2003, 2002. So we know this is another great level. And then of course I'm going to put one down here anyway, because we're not focusing on that. Just going to put one down there, put one somewhere around there, if you get what I mean. So now we can see clearly what the market could possibly do. Now you have what's set up. You have these zones set up. So whether the market goes, if the market goes up, you can expect the market, and you might put like a weaker zone in there maybe. I would say something like this. So if you wanted to use the stepping stone or the step ladder effect, as I call it at times, you could take profit at this point and then take profit there, or you can even go here. See, you got to tap there and there. So you can use these as different levels where you can get in and out of the market, and then just wait for confirmation. Like, I believe that the market will cross this point and it will go up. It will continue going up because you see the market stop there, and I think that it's going to continue going up. And then if the market stops here and then turns around, at least you know you at least know to expect it to go back here. And then if it goes down, you can take the smaller steps and maybe put one here, something like this, and let the market come down to here, then there. But just make sure you have to have your make sure you are you have the confirmation first. You don't want to go in it too soon, or prematurely, what I should say. So this is my method of trading. Very clean. I let the market show me. The market makers have the tendency of leaving back little trails or breadcrumbs, and I like to pick those up and use it as my way of or as confirmation. Because you leave clues behind. Happens all the time. So I have the vision of being able to see which way the market could go, possibly go, might go, whatever you want to call it. But you let the market give you the confirmation to enter. So this being said, that being said, you can see that the market had come up to here, down to here, up to here, down to here, up to here, down to here, back up to here, down to here. So now the market went from there up to here, back down to here. So where's the market going to go now? Well, we have options now. We can see what might happen. So that's what I'm saying. You can definitely make use of this pair right here. You can watch this pair, because now this might not be a pair that everyone trade, but it's a pair, so it's worth watching. It's like 4 pips spread on it, so it's worth watching. So just wanted to point this out to you guys and let you guys know, like, with when you have strength in the market, when you're not over leveraging your account, you can have a trade go from here up to here without a problem, and you can actually withstand the market going up. You know, if you're in on a buy, I could withstand the market going up to here and then bounce it back down, and then or if I got in thinking the market is going to go down and the market goes against me, I could withstand that. I don't want to hold it, if it's going against me. But guess what? I have the strength to actually hold the trade because I have, one, I have patience. Two, I have the equity to hold it. I have the margin level percentage. But when you have the vision of seeing where the market might go, you just develop that patience to let the market do what it do. Let the market tell you where it's going to go, and you just follow right behind it. So that's what I do, and it's okay. Like I think you guys might see some of my trades. I incur swaps. Sometimes I incur a heavy amount of swap. In fact, I traded on the GBP NZD yesterday. Closed out with that long move up. I closed out. It was $5,044 and some change, but I incurred almost $1,000 in swap on my 3 trades. It was like 311 and some change. So, but that was okay. That was a trade from May 9th until yesterday. So it was worth holding. It wasn't a straight run. It went up and went back down, then it went up again. So going back down, I incurred some negative swap, but it's okay. I was able to close it. I could have made a lot more. I got out a little early yesterday. I got out at a known resistance level, and the market pushed up even higher during or after the FOMC. So, but it's okay. I made what I made, and I'm able to trade another day, so I'm happy about that. So I just want to leave you guys with that. I will talk to you soon. You guys like the video, definitely like it. If you haven't subscribed yet, please do so. I like to pump out great content, relevant and new, fresh, all that. So definitely appreciate you guys tuning in. I'll talk to you guys later. Thank you.